This piece of paper in your wallet is about to expire. Every retirement account, every savings bond, every checking account balance is relying on a global agreement that is being torn up as we speak. We are not looking at a recession. We are not looking at a market correction. We are looking at a hard reset, a shift from a debt-backed system to a gold-backed reality. And the window to protect yourself isn't closing in a decade, it's closing now. In the next 15 minutes, I'm going to show you the four-stage reserve currency life cycle, a pattern that has destroyed the wealth of empires from Rome to the Dutch Republic to the British Empire. And I'm going to prove to you, with public central bank data you can verify yourself, that the US dollar has just entered stage 3. The outcome is mathematically inevitable. Millions will wake up thinking their savings are safe, only to find their purchasing power has evaporated overnight. Let's look at the numbers that should terrify every saver in America. Let's start with a fact the mainstream media ignores. In 2022 and 2023, global central banks bought more gold than at any time since 1950. Why? Why are the people who print the paper money frantically trading it for metal? Because they know the math. We are $34 trillion in debt. We are adding $1 trillion every 100 days. But this isn't just about debt. It's about a structural shift. For 50 years, the world needed dollars to buy oil. That system is dead. Now, before you call this doom-mongering, let me be clear, this is not a prediction. This is pattern recognition. There is a four-stage mechanism that governs the life and death of every reserve currency in history. We are in stage 3. The outcome isn't uncertain. It's baked in. Here's how it works. Stage 1. Unquestioned dominance. The currency is as good as gold. Industry thrives. Stage 2. The privilege abuse. The empire borrows too much. They weaponize the currency. They print to fund wars and welfare. Stage 3. The rejection. The world realizes the paper is worthless. Rivals form alliances. They dump the debt. We are here right now. Stage 4. The replacement. A return to hard assets, gold, commodities. The paper currency hyperinflates to zero against real things. I'm going to prove this pattern to you using history. Because if you don't know history, you are destined to be its victim. The Dutch guilder, 1700s. Stage 1. The guilder was the world reserve currency. If you wanted to buy spices or shipping insurance anywhere on Earth, you paid the Dutch. They were the center of the financial universe. Stage 2. They got comfortable. They fought expensive wars with England and France. They started printing paper, receipts exceeding their gold reserves. Stage 3. 1780s. The world stopped trusting the guilder. Merchants demanded gold, not paper. Stage 4. The collapse. The guilder lost its status. The British pound took over. Dutch savers who held paper lost everything. Those who held gold kept their generational wealth. The British pound. The currency of the empire on which the sun never set. Stage 1. 1815 to 1914. The pound was literally as good as gold. A 100-year bond yielded profit. Stage 2. World War I and II. Britain went bankrupt fighting. They decoupled from gold. They printed massive amounts of currency. Stage 3. 1945 to 1956. The Suez Crisis. The world realized Britain was no longer the hegemon. Stage 4. The pound crashed. It lost reserve status to the US dollar. In the 1960s and 70s, the UK saw inflation hit 25%. If you kept your savings in pounds, your retirement was cut in half, then half again. The mechanism is the same. Now, the US dollar. The pattern accelerates. Stage 1, 1944, Bretton Woods. The dollar is backed by gold. The world trusts us. Stage 2, 1971, Nixon closes the gold window. We default on our promise. We start printing. We institute the petrodollar, forcing the world to buy oil in dollars. This gave us 50 years of artificial demand. But now look at today. Look at Stage 3. Stage 3 is the rejection phase. We weaponized the dollar. We sanctioned Russia, seizing their reserves. Whether you agree with the politics or not, the economic signal was sent to China, India, Brazil, Saudi Arabia. Your savings are not safe in dollars. So what happened? Saudi Arabia is now accepting yuan for oil. The petrodollar deal expired in June 2024 and was not renewed. The foundation of the dollar's demand is gone. This is the textbook definition of Stage 3, the structural deficit of trust. And what is Stage 4? The replacement. The BRICS nations, Brazil, Russia, India, China, South Africa, plus the new members, control 40% of the world's population and 30% of the landmass. They are actively developing a trade settlement currency backed by commodities, gold, oil, rare earths. When a currency backed by, trust me bro, meets a currency backed by gold, the paper currency dies every time. The dollar isn't going to zero tomorrow, but your savings in dollars are going to zero in real terms. Here is the mechanism of your loss. It's called repatriation. There are trillions of dollars held overseas. When those countries switch to a gold-backed system, they don't need those dollars. They send them back. Trillions of dollars flood back into the U.S. economy. We have the same amount of goods, but double the cash chasing them. That isn't 8% inflation, that is 50%, 100% inflation. That is the Latin American-style wealth destruction coming to Main Street, USA. But wait, the dollar is too strong. There is no alternative. The U.S. military ensures the dollar's dominance. Let me destroy that delusion. You cannot bomb your way out of a debt crisis. Rome tried it. They had the best military in the world, but when they diluted the denarius to pay the troops, the empire collapsed from within. Economics doesn't care about aircraft carriers. Economics cares about supply and demand. The supply of dollars is infinite. The supply of gold is finite. When the world decides they prefer the finite asset, no amount of F-35s can force them to hold depreciating paper. We are now spending more on interest on our debt than we spend on our entire defense budget. Read that again. The math is broken. We are borrowing money just to pay the interest on the money we already borrowed. This is a terminal debt spiral. Pattern confirmed. But they'll release a digital dollar. A digital dollar is still a fiat dollar. It's just faster to print and easier to control. It solves none of the structural issues. It does not fix the lack of gold backing. It does not fix the debt. It just allows them to lock the gates when the panic starts. Here is what you need to understand. The shift I've described isn't coming, it's here. When central banks are buying gold at record paces, they are telling you what comes next. They are positioning themselves for Stage 4. The governments are preparing. The banks are preparing. Are you? This is the largest wealth transfer in human history. Wealth is never destroyed, it is merely transferred. It transfers from the unprepared to the prepared, from paper assets to hard assets, from those who trust politicians to those who trust physics. Here is my challenge to you. Don't take my word for it. Go look up Central Bank Gold Demand 2023. Go look up BRICS gold currency. Go look up U.S. interest on debt versus GDP. It is all public, it is all verifiable. And when you see the pattern, the complacency, the abuse, the rejection, the panic, you will realize you are standing on the train tracks and the train is coming. I'm not telling you to sell everything and buy gold bars and bury them in the backyard. I am telling you to wake up.